The CFPB alleges that Capital One illegally avoided paying billions in interest to millions of consumers.
The government says millions of Capital One customers should have a lot more in their wallets. The Consumer Federal Protection Bureau alleges Capital One cheated its customers out of more than $2 billion in interest by creating two nearly identically named savings accounts. 360 Savings and 360 Performance Savings. The difference, Performance Savings account offered interest rates 14 times higher than the other one.
Capital One got busted for misleading customers when it comes to their 360 savings account, a whopping $425 million settlement over misleading savings accounts. Watch this entire video so that you can see how you can get a piece of the settlement and how much you can get, as well as how to access it. So the problem is there were two similar accounts. Capital One created two nearly identical accounts. One of them is the 360 Savings and the other one is the 360 Performance Savings. They had massive rate differences. The Performance account offered interest rates of 14 times higher than the regular 360 Savings account. And so they also were allegedly silencing employees, banning them from telling existing customers about the better account option. So now the government accused Capital One of false advertising. So Capital One advertised the lower rate account as having one of the nation's best interest rates. Meanwhile, they froze the rates while offering much better ones elsewhere. So the much better rates were in the 360 Premier account. And so the CFPB alleges that Capital One cheated customers out of more than $2 billion in interest. This has affected millions of customers who were kept in the dark about better options. Now, also, if you want help with credit, if you want more information on how to get in a better financial position, we have a brand new credit education school where you can learn the ins and outs of fixing your own credit, getting approved for personal and business funding. We have a list of different lenders, different secret methods and hacks to get items removed from your credit report, negative items such as late payments and collections. You get all of this inside of our community, as well as ebooks. You're able to send me direct messages as well as post in the community section and have weekly calls. Right now, we're offering a 7-day free trial, so link will be in the description box below for you to sign up and in the pinned comments. Now check this out. Capital One's acquisition of ING Direct made huge changes. So in a groundbreaking move in 2012, Capital One took the online banking world by storm with the acquisition of ING Direct USA, renowned for its competitive interest rates. The rebranded 360 Savings emerged in 2013, bringing a fresh perspective to savings for the future. And so Capital One marked its 360 savings accounts as high interest accounts with a variable interest rate that was one of the nation's top, best, and highest, and would earn much more interest than the average savings account. It also ensured former ING Direct savings account holders that the 360 Savings would still give them great rates. So here's what happened. The 360 Savings account rates went from late 2019 to mid 2024. They were frozen at a 0.30 rate, while the 360 Performance Savings accounts rate started increasing back in 2022. In April of 2022, it went from whatever it was, I believe the 0.30 to 0.40, and then January 23 it went to 3.30%, and then January 24 it went to 4.35%. So here is the CFPB's role in this. They're supposed to be protecting all customers from predatory financial practices. CFPB has sued a lot of different companies, as well as the credit reporting agencies, Equifax, Experian, and TransUnion, and they've been investigating not only the credit reporting agencies, but a lot of different banks and lenders. And they really have ramped everything up over the last 2 years. But they recently just changed their leadership, so this could affect how many lawsuits they're filing. And this is due to some of the things that the Trump administration has done recently. So the new administration has caused a slowdown in some of these enforcement actions. The agency's approach to bank regulation has become lighter. Also, the New York Attorney General stepped in when federal regulations hesitated. And so millions of consumers can be caught in the middle of these regulatory changes. The New York Attorney General's name is Letitia James. She launched her own probe when federal action stalled, claimed Capital One targeted vulnerable customers seeking better savings rates. And so the problem is customers were promised high yield returns and ended up with pennies. So here's a breakdown of the settlement. It's a $425 million settlement. This is the amount Capital One has agreed to pay to resolve claims. $300 million is for interest customers would have earned with better rates. $125 million is for customers with current accounts who still have the regular 360 savings accounts. So this is how the settlement is going to work. The $300 million pays class members the interest they would have earned, and this amount is going to be based on how long you held the account. And of course, the amount of money that you had in the account. And then the 125 ensures that the current account holders will earn double the national average. So this is still pending approval, I believe, when it comes to the actual timeline. That is still pending. So are you eligible? If you have had a Capital One 360 savings account, you're eligible anytime since September 18, 2019. Both current and former customers qualify. The savings covers anyone who had a 360 savings account from, again, September 18, 2019 until the actual settlement approval date. So here's how you check to see if you qualify. Go to the official Capital One 360 settlement site, find the eligibility section, look for check eligibility or file a claim, provide your name, email, and mailing address associated with the account, and then follow the instructions. If eligible, confirm payment details and expect a check by mail. Now, so why does this whole thing matter? This sets the tone for how banks are held accountable. It also shows how states can act when federal regulations have been violated and when federal regulators hesitate. It also reinforces the importance of transparency in financial products. Now, if you want to see more videos like this, make sure that you subscribe. We're going to talk about all things finance on this channel all year long. There will be multiple videos uploaded every single week. So stay tuned, subscribe, hit the bell icon to receive notifications on when I release new videos, and I will see you in the next video.